Hello, my name is Brenton Harrison, and we're here today with the final installment in our series on financial trends that you see on social media. And we've covered so much. We've talked about investing, LLCs, blessing loans, and susus, how to build credit for your kids. And we're finishing today with the type of investment called ForEx trading. You hear about this all the time online, especially if you have Instagram and TikTok. And we're going to cover today whether it's actually as easy as they say to make money with this type of investment. Let's get started. If you have an Instagram account, there's like a 300% chance that at some point in time, you've gotten a direct message request or somebody who's followed you has a bio on their profile that looks a little bit like this. So if you haven't figured it out from all those people who have sent you those message requests, Forex stands for foreign exchange. And it's kind of like a catch-all term. A Forex trader is somebody who goes to a marketplace and they take one country's currency and they exchange it or trade it on that marketplace for another country's currency. As an example, let's say that you go on vacation from the United States to Europe. And when you get to Europe, you don't want to just sit in the corner all day. You want to buy some stuff. Well, you can't take American money to Europe and expect to receive goods and services. At some point, you're going to have to convert those American dollars into European denomination, European currency. And a foreign exchange is the online marketplace where you go to make that exchange. So where does the potential for profit come in? Because we're not talking about people doing this all day to like take money from American dollars, put it in European currency, buy some shoes, and then they're just done with it. People trade Forex because they want to make money. And the potential for profit comes in our example, if I exchange my American dollars for European currency, and at the time I make that exchange, the value of that currency is really low. And I'm expecting over time it's going to increase in value. And if I'm right and it does increase in value, I can exchange it again and I can put that back in American money. And when I do so, I'll have more American dollars than I started my transaction with. Let's take a look at an example of a Forex investor in the United States who capitalizes on an opportunity with the Canadian dollar. So at the beginning of this transaction, $1 in US currency is worth 1 Canadian dollar. So what our buyer is going to do is they're going to purchase 100 Canadian dollars for 100 US dollars. They're exchanging American currency for Canadian currency. That's at 9 o'clock in the morning. Now at 2 in the afternoon, they've noticed that the Canadian dollar has risen in value. So now 1 Canadian dollar is worth 1.25 US dollars. It has increased in value since they made the initial transaction. So our person now has the opportunity to exchange this back into American currency for profit. So what they do is they exchange their 100 Canadian dollars and now they get 125 US dollars back for a $25 profit. So by taking advantage of that increase in one day, they're able to exchange back into their native currency for a profit. If you're looking at that example and you're saying there's no way it's that easy to get started in Forex and make money, like there's got to be more regulations, it's got to be harder to open an account. It's actually not harder. Like there's a bunch of different foreign exchanges all over the world. They're open 5 days a week for 24 hours a day. And they have far less regulations in terms of getting up and running and what you can do than what you'd find in like the US stock market. It's just a much more lenient place to put your money. One area where they're also more lenient is with what's called leveraged investing, which is essentially when you take out a loan to make an investment. There are more barriers to doing that in places like the US stock market. But when it comes to foreign exchanges, it's easier for investors to go get a loan to make an investment using money that they don't have as compared to what you'd find in the stock market. Now, I'm not a big fan of Forex investing at all for the average investor or the amateur investor. And if you want to know why, it's for literally all of the reasons that I just talked about. It's a decentralized form of investing, meaning that you have all of these world's different currencies all over the world that you can trade on these exchanges. And there's not a common uniform legislation to make sure that the rules are in place, that there are barriers in place so that you don't get taken advantage of as a novice investor. Now, don't get me wrong. I think that people should have access to more investments than they actually have access to now. But I also think there should be regulation. If you put somebody out there in the world who doesn't know what they're talking about and don't know what they're doing when it comes to that investment, and then they start taking huge bets and huge risks with no guardrails to make sure that they're safe, you end up with a lot of people who plunge a lot of money into things like this, thinking they're going to make a mint really quickly. And instead, they just end up losing their shirt when it comes to Forex trading. But my biggest problem with Forex and the Forex trading phenomenon actually has very little to do with Forex trading itself, because there are people who are excellent at Forex trading. There are people who have quit their jobs and are making a ton of money doing it, but it's their new job. They're spending a ton of time learning the knowledge they need to learn to make sure that they understand what they're talking about. But unfortunately, when I look online, even when I look at my own DMs at people who are trying to get me into Forex, there's more people with more followers who are teaching others how to trade Forex than there are just pure Forex investors. And it's hard to know if they're making the bulk of their money from the teaching or from the actual investing. And when you think about it conceptually, it makes sense. We're talking about you understanding the fluctuations in value of many different countries' currencies well enough to know what to exchange and when. So if you don't even have a good understanding of what makes the American dollar fluctuate in value, how likely do you think it is that you'll understand what makes the British pound fluctuate in value, or the Brazilian real, or the Japanese yen? So if you're getting started as an investor, I would argue that it's a lot easier for a layperson to get involved and understand the mechanics of a diversified index fund than it is for them to really know what makes something like a peso gain or lose its value. So in summary, Forex can work. But in my opinion, it's a much bigger and complex world than people would lead you to believe. And it's not one I think is built for the average investor, no matter what that self-proclaimed Forex millionaire who's desperately trying to send you a message is going to tell you. If you've been with us since the start of this series, then hopefully you feel like you've gotten a wealth of information and a wealth of context as to some of the trends that you see talked about online. My name is Brenton Harrison. I've really enjoyed going through some of these things with you. If you have anything that you want us to cover in the future, please send us an email, send us a message to let us know of another trend that we might have missed, and we'll definitely make sure that we keep bringing that content to you as frequently as we can. I'll see you soon.